everyone, and welcome back to another video. During this video I'll be covering another example of my personal strategy and how I usually process a chart when placing my trades using my own personal strategy. If you haven't seen the video that I covered my personal strategy, have a look at this video right here because this video will be based on that. If you haven't seen that yet, go check that out. And okay, so let's get started. First of all, we have the British pound with the US dollar chart open right here on the hourly chart. We can see that the past few days we have been making lower lows and lower highs, and we have been in a downtrend for a while now. So we still have a valid downtrend, which is a great sign. And we are looking for short positions only because we are in a downtrend. We want to be trading with the trend. Then we have the moving averages, which are aligned on both the hourly and the daily. And we have price retracing back towards the 200 and actually above it this time. But I still feel comfortable and confident enough to be placing a trade. And there are a couple of reasons why that is the case. So first of all, we have the previous high, which was made right here, which I feel confident enough to confirm that this is still a valid trade. If this wick was above this or even to this high, I will be kind of reluctant to place this trade. But because it was below this, I felt confident enough to be placing this trade. An additional reason why I feel confident to place the trade was because of this blue zone that you see here. So going back on the daily chart, where I usually find my zones, you can see this resistance zone or support zone that was formed from these highs right here. So you can see price rejecting aggressively from this zone, meaning that this is a pretty strong level to be looking at. And you can see that on our current price action, we have the zone rejecting off of it pretty aggressively. And also we have the 50 moving average on the daily chart aligning perfectly with it, which are two confluences for me to give me an extra confidence in this trade. So that is great. And let's go back to the hourly. So on the hourly chart, you can see where the rejection happened. And we have the moving average aligned, we have the zone, we have the moving average on the daily, and we also have the RSI, which is overbought on our indicator right here. And you can see it's above the 80. As you can remember, we have changed the RSI to have an 80 overbought area, and we are also using the length of 6. So that is another extra confluence for me to enter my trade. And then we need a confirmation. The confirmation that I waited was based on the lower time frames. So I placed my trade around this green candle, if I remember correctly. I can't be 100% sure, but let's go down on the 5 minute and just to confirm on the 1 minute. Actually, it was okay. So after it crossed beneath the 1 minute moving average, so it was around this area right here. So place the trade after the rejection of this uh, on the moving averages, and then we have the crossover, meaning that the mini charts are on a downtrend. So place my trade there, and let's go on to the hourly and see how that looks. So zooming in, this was my entry, and we are targeting kind of this area right here. So dragging this slightly lower to be around this area, I think was my initial target. But I will be monitoring this trade to have a look at where I should be moving my take profit. If I see price moving aggressively downwards, and since we are expecting price to be moving downwards, I can drag my take profit to a lower zone. You can see this kind of trend line being met here. So you can see expect to have this take profit around this area. If you were more aggressive, I feel like I want to be a bit more conservative around this trade, because these bullish signs might be onto a reversal. So there might be some rejection, an additional rejection onto this zone right here, and then reverse onto the upside, which I want to be cautious of. So that is why I chose a more conservative take profit instead of being a bit more aggressive and, let's say, targeting this week right here. So something like this, which is not something that I did. I placed the take profit around this area, and you can see that we are on a live trade. We haven't close this. So I'll be showing you the result regardless of the outcome. So even if I lose this, I'll be showing you uh, my result and how the outcome went. But regardless of this, due to how many conflicts I had, even if I lose this trade, I will still be okay with the loss because I felt this trade was good enough. So and for the stop loss, there are a couple of stop loss that I thought of. The first one was above these wicks right here. You can see this zone right here being rejected. So the first one would have been around this area right here, slightly above that, and hopefully it will never be met. A more aggressive stop loss that I considered was this one right here, which is above the wick of where price recently. So I was considering between the two, and in the end, I think I went with this one. But I'm still monitoring the trade, and I have a lower volume to allow me to move my stop loss if I feel like the trade might be reversing still. But usually I would just leave it to hit my stop loss and just be done with the trade. So what I'm expecting here is if the price pushes above this level, we are going to be expecting a reversal. So I didn't mind the more aggressive stop loss. So either of the two, I'm happy. So a bit over conservative take profit, but a more aggressive stop loss to match it, and we get a 3.5, which was actually my risk reward ratio on my actual account. So I think we got about the measurements right. So this is how my trade looks like, and what I'm expecting here is to price not to go directly down. What I'm expecting here is to see some rejection off of the 200 moving average and kind of zigzag down towards it. So this is something to keep in mind because price doesn't go directly downwards. It's going to push against you. So eventually uh, the trend might be exhausting and kind of pushes back up and then goes down. So you got this wavy kind of um, momentum, and you don't see this sharp drop onto the downside. So you can see on the previous how it went. Okay, so in this case there were some pretty aggressive candles, but in most cases you will be expecting to be seeing something well like this. So a couple of green, couple of red candles, and price slowly moving downwards to the downside. So this is how a trend may look like. So this is what you would be expecting to. You can see thus far we have been making some profit, and in case that I sense that there might be a rejection and a reversal, I can still close the trade earlier because of how great my risk to reward ratio is. So even if I close this on a 1-to-1 risk to reward, so around, let's say, this area, if I pull it upwards, you can see, let's say closed it, well, right now on a 1-to-1, I'm still 1% up on my account. So that is why I like to keep a pretty wide risk to reward ratio, because it allows me to not only close the trades early while still being in profit, but gives me a greater, uh, regardless if most of my trades lose, if some of them win, I'll have a profitable account. So that is something that I feel new traders don't put enough thought into. So if you always target a 1-to-1, you need to have over 50% to be profitable. But if I were to be targeting this, I don't need to have 50%. I don't need to have 60%. Even if I have 30%, I will still be profitable because of how great my risk to reward ratio is. So I hope you understand what goes through my head and when I'm placing take profit and stop losses. And I'm hoping that uh, you get this because it's really important to manage your money well. And this is something that I feel most people struggle with, especially early on. And that is why they're losing money instead of they might be blaming the strategy or different stuff is usually how they manage their money. Anyway, this is how I process trades, and this is how I dealt with this one specifically. And this will be the end of this video. I'll be showing you again the outcome in a bit. So thank you for watching and stay tuned for the result. And just to show you the outcome of this trade, this is how the trade played out. So our initial position was around this area right here, targeting this area, around this area right here. It never actually reached this, and we will have hit our stop loss, which was around this area. I can't remember exactly where the stop loss was, but luckily I'm using a trailing stop loss, which saved me some money instead and actually got me out in profit instead of losing a percent of my account. So if you're not sure what a trailing stop loss is, I've made an entire video about trailing stop losses. So in essence, all I did was move down my stop loss while I was in profit and moved it initially around this area. So after this kind of push upwards and retracement, and then this huge engulfing candle that pushed beneath the moving averages, I've placed my stop loss around this area right here, then moved it downwards to be around this area. And once there were some news coming out, which I planned on getting out around this area, but unfortunately I wasn't able to get onto my charts and close this trade in more profit. So the news came out, and obviously it came against our trade, and that was unlucky. And we got out around this area right here. So once these long wicks came out, we got out with some profit, and you can see my actual trade on the right hand side from my platform that I'm using as my main account. So this is the result, and this is how I manage this trade. If you want to learn more about trailing stop losses, and this is something that I use in every trade that I'm doing, have a look at this video. And thank you for watching. Have a good rest of your day, and goodbye.